Hey everybody, today we're going to go over the MACD indicator, which stands for the Moving Average Convergence and Divergence indicator. And if you're wondering what platform we're using Optimus Flow by Optimus Futures. So this is the platform that we're going to be going over the MACD on. So first of all, if you do want to turn on the MACD on Optimus Flow, you simply click this Add Indicator button at the top of this annotation bar. So you click it and just type in MACD, and it will pop up. Just click that and it will pop up on the bottom of your chart. So as I mentioned, this is the Moving Average Convergence Divergence indicator, and it's really just three main things. It's the MACD line, it's the signal line, and it's the histogram, which is tied to the MACD and the signal line. The MACD line is essentially just the 12-period EMA minus the 26-period EMA, and then the signal line is just the 9-day EMA of the MACD. So the MACD line, the 12-period EMA minus the 26-period EMA is the blue line. So as you can see here, if you follow my arrow here, the blue line is your MACD line, and then the signal line is your orange line, as I mentioned, being the 9-day EMA of the MACD line. Now, this is a very popular indicator, so a lot of the time people are looking at it, and a lot of the time it can make the market, meaning enough people are watching this indicator, it actually creates a reversal just because it becomes almost self-fulfilling. So it is definitely great for trend following. However, there are definitely disadvantages to using it because you can have false signals, but this is really something that you can get with any indicator. So it's not just the MACD that you can get false signals on. It's pretty much any indicator out there that you can get a false signal on. So we'll go over kind of 1, 2, 3, and 4. Going over 1 essentially being a bearish MACD cross. So that is when the MACD crosses to the downside. So the blue line crosses below the orange line, the signal line. Now, one of the main things that I haven't touched on is the histogram. So the histogram is really interesting. So if you look at the histogram distance right here, you'll see here that I drew a rectangle pretty much from the signal line down to the MACD line. And so the histogram on the bottom, the histogram is just these red bars. Essentially, all the histogram is the distance between these two lines. So you can see here, this line aligns right with this MACD histogram bar. So if I move it here, you can see that's the distance between them. If I move it down, that captures the exact, essentially the distance and the size of that bar. So that's essentially all the histogram is. So the histogram is really just to get an idea of, is the MACD line diverging or starting to converge back towards the signal line? And a lot of the time, you can have kind of false signals like this, where you have the MACD line crossing up, looking like it's going to curl up, and then you get a rejection and a continuation down. So that's one of the errors a lot of people make, is you do have to really wait for the MACD to actually cross to get a stronger signal. So the MACD downside cross is shown by number 1. You can see here on the chart, if we look at the price chart, once the MACD crossed down, we had new lows pretty much for a couple weeks. So as this crossed down, that was a signal that the trend was switching to the downside, and you can see that it moved down. And then finally, you can see essentially a little bit of divergence, right? So divergence is when you have price doing one thing and the indicator doing the other thing. And you can use divergence on the MACD essentially by looking at, okay, you've got lower lows on price shown by this downward sloping line, this black line that I have here. And then you can see that the MACD histogram actually has these higher lows. So a lot of the time you can actually use the histogram as a way to look for divergence. So if you have lower lows on price, but you have these higher lows on the histogram, that is one way that you can find divergence. And one of the errors people make is that is definitely going to be a reversal. You can easily have divergence invalidate, right? There's nothing in the market that is guaranteed to happen or guaranteed to not invalidate. Any indicator, any signal in the market can invalidate. This is really a probabilities game. So one thing, as I mentioned though, that you can use the MACD for is looking for divergence with simply just the histogram here. So you could use it downward, lower lows on price, lower closes, higher lows on the histogram, or you can use it the exact opposite. As we can see here, this is negative divergence. Prices are going higher. However, the histogram is starting to slope down. You've got a lower high here on the histogram. So this is something you can use for potential reversals to the upside, but also potential reversals to the downside. And essentially, that would just be the trend is exhausting. So one downside cross, MACD crosses below the orange line, the signal line. Number two, this green number two shows when you have a MACD cross to the upside. So the MACD line, the blue line, is crossing up and closing above the signal line, which tells us that the trend is starting to reverse to the opposite side. So instead of moving down like we had with number one, finally, once the MACD crosses up, you can see number two, a bottom was put in, and you continue to move up. Now, one of the biggest errors that people make is assuming that if there is a MACD cross to the upside or the downside, you're going to have price move with that. Well, number three is a great example of how that's not the case. So you can see here, we had the downside cross in April of 2023 shown by number three, but you can see here that price really didn't move much. It just was range bound. So just because you have a MACD cross to the downside or a MACD cross to the upside does not necessarily mean that you're going to get a big move in either direction. You can sometimes just simply be range bound, and that is very much one of the issues with the MACD that a lot of people don't really understand. So definitely a note that just because you have a big MACD cross to the downside or to the upside does not guarantee a big move down. Sometimes you'll just have range bound price action. So it's important to sometimes use other indicators in conjunction, maybe using the RSI or the Williams percent range with the MACD can avoid some of these false signals that you may have. Now, the next way that you can use the MACD is through divergence using simply just the MACD line and price. So same thing, you can see that the divergence also played out here on the histogram. So you can see the histogram had a lower bar here with the higher highs and higher closes shown by number four. So upward sloping bar is higher prices in closing at higher prices. And then the four on the bottom is essentially the MACD hitting a lower high. So price is going up, MACD is actually slanting down. That is your negative divergence. So negative divergence can also just be known as bearish divergence, where this is signaling a potential move to the downside, which you can see here is what we got in late July, and we had a pretty strong move to the downside after that. So there's many different ways to use the MACD indicator. One of the main things and fallacies I think with the MACD that a lot of people don't realize is you can use the MACD more than just a MACD cross to the upside or the downside, which is just when the blue line crosses below or above the signal line. You can use it with divergence. You can use it with really a number of different things. So, sometimes if you've used the MACD for a very long time, you don't even really have to use the histogram because you have a general idea of, okay, is the MACD getting closer or diverging from the signal line? But there are times where it's really hard to see that with the naked eye, and that's why it sometimes is important to have the histogram on just to see, okay, is that actually still diverging from the signal line or is it actually starting to get closer to the signal line? And these bars in the histogram will definitely show you that. So, the main thing that I wanted to go over in this video is what are the advantages of the MACD? One, it really gives you an idea of overall trend. Is something trending? Is it exhausting? A lot of the time you can use divergence to see if a trend is exhausting with either the higher highs on price and the lower highs on the MACD, or opposite where you have lower highs and then higher highs on, or excuse me, lower closes and then higher closes on the MACD, or simply just the histogram that we went over. So this is a very popular indicator. It can definitely create some self-fulfilling prophecies here. The more people that are watching the MACD on a specific stock, the more likely that it could become a self-fulfilling prophecy, essentially. As I mentioned, one of the main issues with the MACD is a lot of the time you can get a false signal. The MACD may look like it's starting to curl up, but then all of a sudden you get a continuation down with new lows put in place. And so, these are really the important things to know about the MACD indicator. It's a trend indicator. You can use it with divergence. You can use it as a simple cross, and you can really use divergence both with the histogram and just with the MACD in general. So hopefully this video was helpful in understanding the MACD a little more and how you can utilize it and apply it to some of your different trading techniques. And we will have more videos coming out like this coming soon.